Well, good morning again on the Seriously Don't Do That podcast. It is a gorgeous day here in Greenville, right between Charlotte and Atlanta. In case you forgot, the brutal humidity outside finally broke. And so I decided I'm going to go for a morning run because, as you probably remember, I'm training for this crazy sprint triathlon. Well, Samson, the golden retriever, said he wanted to come along. So I agreed, and it became less of a run and more of a negotiation to keep him going. You know, I was thinking as I was out there, Samson as a golden retriever loves everybody. It doesn't matter if it's the mailman, UPS, a squirrel. And while that's adorable in a dog, it is a disaster in a B2B deal. So this week's mistake, the Seriously Don't Do That, is don't rely on one champion. So you get in a deal and you're talking with them and you find a person that loves you. They're great. They nod at every demo. They forward your stuff to everybody else. And what you end up doing, because it's the easy path, is you single thread the whole deal through them. Again, it's easy. They listen to your calls. They will go to dinner with you. And I've been guilty of this as well. But what happens typically is the deal will stall. And then your champion starts to sound less and less like a champion. They start to use terms like, let me check internally, or I don't know, or the worst, they ghost you and it's silent. The champion of your deal doesn't really equal a deal closing. And in regulated B2B, one person absolutely does not decide. So there's a quote from Forrester in their 2024 State of the Business Buying Report that there are as many as 22 people involved on a B2B deal. 22. 13 internal and many times 9 external. 22, and you built your strategy around one. So let's explore a little bit why this is the default failure now, and then the fix. And we're going to talk a little bit about how we will remap these deals. So first, why is it the default failure? Well, committees are becoming bigger and bigger and angrier and angrier. Conflict anymore is the norm. I don't know about you, but I've been on numerous calls where it's almost like you're not in the room with the committee, where they're going back and forth at each other, and it's almost like you're an accessory to their internal argument. But if that's happening when you're on a call, then it certainly is going to happen when you're not on there. So we need to keep in mind that those committees are bigger and bigger. Matter of fact, 74% of buying teams now show what Gartner calls unhealthy conflict. And when you arm one soldier to go into a conversation, into a committee war that you can't see, it fails. And again, like I say a lot, hoping that one person is not a strategy. Secondly, first, committees become angrier and angrier. Secondly, deals stall. And this one stings. 86% of B2B purchases stall in the buying process. And, many times you go, wow, gosh, the buyer liked me. I've heard that a million times from salespeople that I've worked with. Oh, this guy loves me, or this girl loves me. But still, 40 to 60%, according to HBR, Harvard Business Review, end in no decision. I was listening to a podcast earlier today, and they were talking about how when we're selling into a deal, many times we're selling not against a competitor, but against no decision. And when your deal is into no decision, a lot of times it's because we're single threading those through one person. And again, just want to reiterate, it's not that they picked someone else. It was no decision. I like to call that dying of internal gravity. And so we talked about committees being angrier and angrier, deals stall, and then it's even worse in regulated industries like we're in. So specifically in healthcare, 60% of healthcare orgs put 5+ people on a tech decision. 27% put 10+. That comes from HIMSS. And then also a healthcare tech cycle is typically 12 to 18 months. You got security questions, HIPAA, pilots. So when you deal with just one clinical champion for a signature, it's not gonna work out well, and it's gonna, even at the best point, it's gonna extend your ability to close quickly. So seriously, don't do that. Kerry Cunningham, the head of research at Sixth Sense, said, drive awareness and preference early. Again, awareness and preference early across the group, not lock on one person at the end. A founder of a fintech told me last week, Dan, I closed 5 of our last 7 deals personally. I said, that's not a sales team, that's you. In regulated markets, the buyer wants specificity. Your team can't deliver that if the ICP only lives in your head. We fixed that. 2 to 3 weeks, one sprint, a target your team can actually run. It's called the ICP Sprint from Gator Gain Group. Start at greatergaingroup.com. Seriously. So your ICP is not a person. A lot of us are going out there and we look and we say, oh, it's a VP of clinical ops. She's 45. She's frustrated with X. That's a persona, not your ICP. Your ICP in reality, it should be a committee blueprint. And this means a map of the 8 to 13, well, could be 18, but the 8 to 13 roles that must say yes, or at least not say no. Every seat, what it fears, what it needs to hear, and how you're going to convince them that your product is the best for them. And I'm going to say what we've been saying this whole month. If you don't know the target you're shooting at, then everything's a target. A champion is one chair in a room full of chair. But as usual, I'm not just going to give you the negative. I'm not just going to give you the advice. I'm going to tell you exactly how to map that room. So if you want to slow this down, hopefully you don't have to slow it down too far. Or if you're listening to me at 2 or 3X, good luck. I talk fast. But stop it here, grab a pen, pause me if you need to. And we're going to get into each seat, who they are, what their objection is, the message and the proof. Of course, it's the same product, different message, and that's the work that you have to do. First one is the champion. Again, we're familiar with this because we already started talking about this at the beginning. How do I sell this internally is their main thing. They're thinking about, look, I love this product. How do I pitch it? So the ammunition you need to give them, things like a forwardable one-pager. And when I say easy for me to say, a forwardable one-pager, it's not something that's product specific. It's very user and use case specific. And it's the ROI kind of in their language. You want to equip them and not sell them. So your first is your champion. Your second, economic buyer. Obviously, they're looking for a return on investment. What is the cost if it fails? So the ammo for them, business case, payback, what happens to their number? These are often folks that have budget line responsibility and in some way are writing the check. The third, IT security. These are the folks that kill deals silently, not bad people. Dealt with a lot of IT and security folks over the years. But they're looking at things like, is this going to make my architecture vulnerable? Is this going to be really difficult and cause a lot of problems with integration? So what they typically look at is things like security architecture, SOC 2. You don't want to hold these people off to the end. Many times it's easy to kind of pump that ball down the road. You want to get them involved very early on and, again, not bring them in and surprise them at month 6. They, of all people, don't like surprises. Your fourth, I miscounted, is compliance. I would call them a voting member of the committee. What they're looking for is, will this cause me regulatory risk? Will this make my job more difficult? Typically in healthcare, they're looking at things like HIPAA. In financial, they're looking at things like SOC 2. They want to make sure their framework, their docs, they want to be able to defend this. And they use a lot of terms that surround kind of a language of defensibility. So your fifth is legal. They're really concerned about liability, data ownership, indemnification. What you want to do here is, I always tell people this because of my legal background, I try to be a minimalist, meaning that I try to use the minimal amount of terms as possible. And we try to, I advise my clients to try to accept as many things as they can stomach rather than kind of straining at small language. That's something that a lot of founders, I think, miss because they either don't get external counsel or they don't want to have external counsel. They load a lot into their agreements, so it makes it very difficult with legal. You want to engage them early, make your paper as clean as possible, and just a very standard MSA. You want to be, the faster you're reasonable, the faster you're going to get to the deal with legal. The sixth, procurement. Job is cheaper and slower. And so, people always laugh at this. Procurement, you don't want to ignore procurement, but many times understanding what their motivation is will help you in getting through. You don't, if you can at all avoid it, you don't want to have an adversarial relationship. But they're thinking about, why should we choose this vendor and why this price? So, you want to have what I call a defensible price. something comparable. You want to have a logic to how you built it, and then let them extract the value. Plan for them, don't fight for them. The seventh, finance. Finance does not equal the economic buyer. They're actually two different things. What finance is looking at is, how does this hit the books? Is it going to capital expenditure? Is it an OpEx expenditure? When is that? What are the payment terms? How predictable is the what we're going to be paying so we can budget it? So again, a little bit different than the economic buyer. Eighth, executive sponsor. So many times this is a senior VP level. Your job is to make them look smart. Okay, they're trying to determine, is this going to make me look smart or stupid? There, probably your biggest thing is peer proof. Other people that have done it, testimonials, even if you can put together a reference conversation, they are never the first one off the diving board and into the pool. And then finally, adjacent influencers. These are people that you may not think of, having gone through those 8 end users. Okay, it could be an admin that whispers, wow, they're difficult to deal with. These people can move the deal, but they are off the org chart. And next week, if you tune back in, we're going to talk a little bit more about, we'll call these hidden decision makers in week 4. Now, you grabbed a pen, you wrote all those down. I'm going to give them to you one more time. So it's the champion, the economic buyer, IT and security, compliance, legal, procurement, finance, the executive sponsor, and then your adjacent influencers. Now, look at your deal. How many of these people, if you talk to, if you talk to one, that's not a deal, that's a hope. So Prospeo in 2026 put out a very interesting stat that said, if you are talking to 3+ stakeholders in parallel, not all 8, just 3, you will have a 2 to 3x close rate versus single threaded. Of course, they base that across, I think it was a couple thousand deals. So again, this is not a tactic, multi-threading. It's the difference between a forecast you can trust and a wish list. And it's very capital efficient. Stop the leak. Don't buy more pipeline. So this is why when I talk with founders, they're saying, I'm getting meetings, but nothing converts. This is typically the number one reason, in that they're talking with just one person in a 10-person or 20-person room. So here's your assignment for this week. I want you to take your next 3 open deals, or 3 open deals that are real in your forecast. Draw out the committee map on each, those 8 to 10 seats that we mentioned. And by the way, we'll put those down in the notes for you as well. Next to each seat, name the human that does that. And it's not just a title, it's the human. So it's Dan Griffith, right? Or it's, Rick Astley. He's going to sing a song for you. No, you're going to have to, you assign a human to that. Again, not a title, or write unknown. If you have a lot of unknowns, then that's the point. Each of these unknowns can kill your deal. Now your assignment is go out and find them. So 3 deals, map the room, find the unknowns. It should be about 20 minutes per deal. It'll change what you do tomorrow. So thank you again for coming in today. Next week, we're going to talk a little bit about hidden influencers, the ones that aren't on the map. We'll find the people hiding in the corners. If you want to have a conversation with us, certainly please reach out to us. And hopefully today's Seriously Don't Do That podcast helped you out. Look forward to seeing you again.